So we're going to look at the three most critical mistakes that people make in regards to their RRSP. So you want to avoid making this mistake so you don't have a huge net tax payable. Okay, so we're going to look at exactly the first one, which is getting the dates incorrect. So if we're looking at the dates, you have 60 days in the next year to make a contribution for the previous year. So for 2026 or for the 2025 tax year, that date is March 2nd, 2026. That is the deadline for contributing to an RRSP for the 2025 tax year. If you miss this, so let's say March 2nd passes and you don't have a contribution, you haven't contributed to the 2025 year by that period or in the previous year after March 2nd, so let's say December 31st, you haven't contributed, you miss out on having a contribution for the 2025 tax year. This can be very bad for you if you are a high income earner, because essentially your RSP contributions from a tax theory is the best if you are a high income earner, as it will completely bring down your net income for tax purposes and therefore your taxable income, and in which case you'll save a lot of tax because you're a high income earner. You'll be taxed at a higher bracket. Okay, so that's the first mistake that most people make. They mess this up. They're not being careful with the dates and they end up missing it. The second mistake is not being able to actually show that you had a contribution. Okay, you don't report it. So here is the Wealth Simple tax software. So here you have an example of one. So Wealth Simple Tax is the one that I recommend that people should use. For me, it's the most user friendly, the easiest one to use. And again, if you do end up using it and you fund your account, you'll get $25. Check the link in the description. This is the tax example form. So we have an example, Mitch Smith here. You have to go fill this out in order to get this filed tax form, so you can search for forms. You search up RRSP here and this will pop up. So in your RRSP, you need to look at your 2025 deduction limit. Here there's a note about figuring out where you can even find that in your notice of assessment of the previous year. So your 2024 notice of assessment, you'll have that deduction limit for 2025. Take a look, input it here. It asks you, did you make any RRSP contributions? You say yes. You type in what type of RRSP contribution. So it'll either be from March 4th to December 31st of 2025, or it'll be from January 1st to March 2nd of 2026, which is, of course, that deadline that we're looking at. That's for your RRSP. This is, of course, if you're single, you're not married. If you have a spousal RRSP, so you're married and you have a spouse and you have a spousal RRSP, you can also put it under a spousal RRSP and claim that deduction. It just depends on what it is, which type of RRSP. So in this case, you would put down this amount, the description, where it is, which financial institution, and then the amount. Okay, so you'd put down, I don't know, $2,000, for example, and then that would be exactly how much you would get back. In this case, the refund hasn't updated because we haven't showed any income, right? The income is zero, so you don't get a refund. The RRSP, you'll only get a refund if there's income. Okay, so making sure you do not forget about making a deduction. All right, so if you forget to make the deduction, it'll be no automatically, and you will not get to have that tax savings that you otherwise would have had by having that deduction. All right, now the last one we want to look at is the home buyer's plan. So the home buyer plan is a program that allows you to withdraw from your registered retirement savings plan to buy or build a qualifying home for you or a specified disabled person. Currently, the home buyer's plan withdrawal limit is $60,000. So essentially, you can withdraw from your RSP $60,000 in order to buy your first home. Okay, and there will not be any tax implication. However, you actually have to repay that. So, you can take a look at how you participate in that. But what we want to know is, how do we repay that? So you go and you see the repayment plan. You have a 15-year repayment plan. Okay, so you have 15 years to repay that. So let's say you took out the 60,000, you have 15 years. That means you have to do a repayment of 4,000 each year. Now, generally it starts if you made your first withdrawal before January 1st, 2022, your repayment period is the second year after the year you made your first withdrawal. So for example, if you made your first withdrawal in 2020, the first year of repayment is 2022. But you have a temporary repayment relief, which is available to defer it by an additional 3 years. So in that case, it'll be your first repayment would be 2027, because that'll be your 5-year period. Your 2 years after your first plus the 3 deferral, that's 5. But again, it'll be over a 15-year period payment, and you have to make a repayment each year for 15 years, okay? So you have to repay the amount that you withdrew. Otherwise, you will have tax implications. You'll be taxed on that. Okay, so you're allowed to repay more than the minimum, but any repayment of less than the minimum or repaying none of it will go into your income, RRSP income on line 12,900 of your income tax benefit return. Okay, so you can repay more than that, but if you don't repay it at all, you'll have to have that amount, that 4,000 as income in the year. If you repay some of it but not the entire amount, that difference will be the amount that you have. Okay, so again, very important, because the tax implication here is if you don't make the repayment when you're supposed to, you'll have to show it as income in your tax return, which of course will then be taxed at whatever rate you are. If you're a top earner, it'll be taxed at the highest bracket, for example. So when you are making your home buyer plan repayment, make sure that when you do answer this question, it says, does your lifelong learning plan or home buyer's plan have a balance? You say yes, my home buyer's plan, or yes, both. Balance from your home buyer's plan statement of account, you'll write down the balance. You'll put down the amount to be paid in 2025 from your home buyer's plan, and then your RRSP contribution designed as a repayment under that. Okay, and then it'll calculate any unpaid amount that'll be included in income. So making sure that you're able to do this when you are filing your own tax return is super important. Otherwise, you're going to have a problem. So the 3 mistakes that happen when you're dealing with your RRSP is, number 1, you get the dates wrong and you forget to contribute for that tax year, especially if you're a high income earner for that year. Number 2 is not knowing how to actually show it on your tax return, especially when you're doing it yourself. Not showing your RRSP contribution in your tax return. And the last thing is also not repaying your home buyer's plan or life learning plan. But in this case, we're looking at your home buyer's plan. Okay, if you don't have that, you'll also have a tax implication there. Remember, if this video helped, subscribe to the channel for more practical Canadian tax guidance videos. Remember, this is general information, not personalized tax advice.